Hey guys, welcome to DevTech Finance. In this video, we would be learning about what exactly is due diligence in banking terms. This video is a part of banking terms module, so I recommend you to watch all other related videos to get an idea about the most important and most commonly used banking terms. So let's start with understanding what due diligence is. So customer due diligence is the process where relevant information about the customer or borrower is collected and evaluated to analyze any potential risk for the bank in future in terms of default on loan repayment. So whenever as a borrower you are going to take loan from any bank will carry on the due diligence process, which is nothing but analyzing all informations about you to get an idea about what could be the future risk on the bank in case you are defaulting, or what kind of borrower you would be, what would be the purpose for which you are taking on the loans, verifying your documents, taking on security charges, etc., etc. So all these things which is related to verification and documentation and then analysis of your information as a borrower by bank is referred as due diligence process in banking. Borrowers are asked to fill application form which contains information necessary to evaluate the eligibility of an applicant. Application details are then thoroughly verified by credit officer. So as a first step, when you are going to visit any bank and asking for loan, you would be provided with the loan application form. In that loan application form, there would be various informations which you would be required to fill accordingly, like your name, your address, the purpose for which you are taking loan, your income, etc., your residential proof, all these things. So you would be asked to fill that application form, and on the basis of the information given by you in that application form, the banks will carry on their due diligence process. They will verify all the information, and they will also check the authenticity, whether you have given right information or not. At the end of verification process, the bank must be able to establish that the information given are authentic and true. So at the end of verification process, banks should be sure that the information provided by you is true and authentic. Then only they would provide you loan. And this is very important measure as a risk management in any banking and financial institution to make sure that their borrowers are not defaulting on their loan repayment, because the EMIs which contains of principal and interest, the interest amount serves as an asset for banking business, and that increases the business of banking. So in case any borrower defaults, it becomes NPA, it becomes a financial burden on any bank. So they take these preliminary steps and they try to verify to make sure that their borrowers don't default in future. So let's see what all details are verified under due diligence process. So first will be your KYC verification with relevant documents. So KYC is nothing but a form which includes like know your customer, which will be containing all your personal details. So KYC verification would be done as the first step under due diligence process. Then your PAN number verification from IT website. Credit report verification from credit information companies. So your credit report or credit score which you say provided by credit information companies, bank check on that also, because it shows your past loan behavior. If in past you have taken any loan, how was your loan behavior? So whether you were defaulting on your loan EMIs payments, or whether you were making timely payments. So your credit score or credit report would give an idea to the bank that are you good enough to be provided loan. So a credit score generally ranges between 300 to 900, and any score above 700 is considered good. Then your house visit to ensure residential address. So the residential address which you have given in that loan application form, that would be verified by a bank official by coming to visit your house as per to check on whether you have given true information or not. Then telephonic verification of the individual at the office or business phone number. So the phone number you have provided, that would be also verified through telephonic verification. Verification and inspection of your mortgage property offered as security. So if it is a secured loan and you are taking it, you must have kept something as security or mortgage, which we say in terms of the asset which you possess. So that would also be verified and inspected that the asset which you have kept as mortgage or security, that is on your name only. Title investigation of the property offered as security or collateral, already we talked about it. Valuation of such property by a bank appointed valuer. So the property would also be tried to valuated. So what is the valuation? What is the current market price of that property? Because that would serve as a security in case you default on your loan. That could be taken. That could be taken in possession by the bank and can be auctioned to recover the money. So to have all the legal rights in possession, bank will verify your property papers as well. Consulting with bank's legal advisor regarding security documents authenticity. So banks also consult with their own legal advisor, which will tell about the authenticity of the documents which you have presented. And all these process is carried out to be secured enough by the banks to avoid any kind of financial burden or any kind of defaults in future, and also to be on the positive side in any case if there is legal proceedings and all. So thank you for watching. This was all for this video. Do like and share my video. Subscribe to my channel DevTech Finance. Thank you.